Most mistakes don't happen when you post in the journals, they happen before the journal. So as an accountant, it's very important that you know your chart of account like the back of your hand. Even though you know all the accounting software, you don't know the chart of account. I'm not sure you'll be able to understand what you're doing, because before the system was made, there was actually a why behind it. So welcome. Your chart of account is equals to COA, means chart of account, equals to what your business thinks. What the business thinks is important. So that is what you're supposed to communicate to your management, not the chart of account. Let me introduce myself. My name is Blessing Ekama, the founder of Axfair Hub, Ash in quotes. Axfair Hub is a finance and accounting practice, in quote, a pre-audit support practice which help businesses clean up their records, messy records, help businesses fix their backlogs, and provide and build sustainable financial systems. So this channel is where I share my practical accounting tips for founders, for professionals, and early career accountants to give them clarity about accounting. Now let's go right into business. So the part one of this video is, why does chart of account exist? The chart of account exists because accounts are not for accountants. Number two, your account answers questions for you. They answers the business questions. And number three, your management asks question. They ask question like, are we profitable? What is our cash position? This comes to what I'm going to say is that cash is not equals to profit. Those Because I have cash does not mean I'm profitable. And because I'm profitable does not mean I have cash. I can have cash and have profit, but cash does not equal to profit. So when you prepare your chart of account, they answer these questions: your cash position, your obligations, like what you are owing, what you have to give to others. It answers those questions. So knowing your chart of accounts and how it exists is very important, because with those chart of accounts, you'll be able to answer questions and provide reliable answers to your management. Number two, the five non-negotiable accounts associated with chart of account. There's a reason why it's called chart of account. The five non-negotiable are COA. Remember, COA is chart of account. With the COA, we have one, asset; two, liabilities; three, equity; four, expenses; five, income. One, two, three, four, five. These are the five non-negotiables with our account. Number one, what is asset? Please lis ten carefully on how I'm explaining this. Assets are economic benefits. Assets are what you own, what you can control. Those are assets. Examples of assets: we have cash, we have inventory, we have receivables. Receivables means debtors. These are example of assets. We have, should I say fixed asset? Let me just put equipment. These are example of assets. Assets are what we own and what we can control. Remember, they give us economic benefit. Liabilities. Liabilities are what we owe others, our obligation to others. What do we owe others? And those we include, liability includes our payables. So our liabilities can be payables, can be loans, it can be tax, tax payables, because we might not pay tax in the current year and the next year. So liabilities are what we owe people that are not in our organization. Equity. What is equity? Equity means owner's stake. Another name for equity is shareholders fund. Equity is concerning your shareholders. So some of you might be lucky to have shareholders. So this is where they fall into. Your shareholders fund includes what? Your share capital, your reserves. This common. I know we have share premium, but I'm just going to use this two here. Assets are what you own, what you control. They bring economic benefits. Liabilities are what you owe others. Equity are owner's stake, also known as shareholders funds. They include share capital, reserve. What are expenses? Expenses are like they are what you incur. They are what you incur to bring income. They are what you incur to bring income. So example of expenses, I'm using for my head: salaries, rent. Then those are example of expenses. We have a lot of them. Then for income, what are income? Income is what? Income are your sales, what you get from your sales. Income. Another name for income is, revenue. So income is like your sales, what you get from sales and all that. So as an accountant, understanding these five non-negotiable is very important for you. What falls under, if you can be able to understand it. See, posting is, your financial statement is correct because then you have been able to identify it. When you are not able to identify chart of account correctly, that means you are going to misguide your financial statement. Your financial statement will be misguided and it will not be correct. For example, imagine cash that is under asset is under liabilities. How do you think your financial statement is going to be like? It's not correlating. So you understanding this is a very good thing, and there are lots of examples under this. Maybe you can go and research more, but I've given you insight on how to understand your chart of accounts. So now in our part three, we're talking about your parent versus your sub account. What do I mean by that? Parent account is bank. Sub account, for example, your company uses GT, uses Access, uses POS. So this, in your financial statement, what the management is concerned with is bank. This one is for reporting. Then this sub account, the GT, the Access, the POS are for control. I don't know what to use them to do, but these three needs to reflect in this one, because in your financial statement, where will I see bank? I'm going to see bank in your statement of financial position. I'm also going to see bank in your statement of cash flow, where I will see cash over. This is what I want to see. Nothing, I don't have a business is whether you are using GT, whether you are using Access, whether you are using POS. That's not my business. My business is that this is what I want to see. So for parent and sub account company, you need to understand, because if you understand all this, it's going to make accounting simple for you. It's going to make your accounting system seamless for you. So another thing we're going to be treating now is how does your chart of account connect to your financial statement? Yes, I told you chart of account is what like is behind the scene. If it is not properly structured, like if it is more, it can cause confusion, and if it is less, it can be lack of control. So your chart of account does not need to be bulky. It needs to just contains what relates to your business. For example, I will use a school. For a school, okay, I will use a school and a cooperative society. For a school, chart of account, my assets, I'm supposed to see my non-current assets, my current assets, my yes, those things are supposed to be my chart of account. Then for my liabilities, I can see loan, staff loan, maybe pension fund, like people that were actually collecting their pension at source but were not paying them. We're supposed to see those things in your liabilities and all that. So you need to understand your chart of account. Now let me go to why. So how does your chart of account connect to your financial statement? Number one, your chart of account reflects in your profit or loss account and also in your statement of financial position. If it is wrong, your account will not balance. Chakam. And you know your statement of financial position, your asset is supposed to be equals to what? Your liabilities. It is not going to balance. No need for too plenty talk. So and in such case, adjustment is not necessarily what you need. You need structure. So you adjusting will not do the work. You need structure. And by using structure, you need to know where to correctly place your account. Expenses, P or L. Income, P or L. Liabilities, SOFP. SOFP means statement of financial position, which was formerly known as your balance sheet. Sorry, SOFP. Sorry. Assets, SOFP. Then your one is missing, equity, SOFP. We have other financial statements too, but I'm actually just saying the main ones. We have other financial statements. So if all these are not properly structured, they can cause confusion. Now, I'll go to the final warning because I don't want this video to be long. The final warning is that as an accountant, you should know your chart of accounts, practice, read, learn more. Because even though I will use the accounting software to demonstrate all this for you, you might not understand it. Learning accounting software is actually good, but before you learn, be grounded at some point. Okay, you might not be an expert because you learn every day, but be grounded at some point. If your chart of account is not if your chart of account is not structured, it may lead to you answering your business questions wrongly. You're not giving appropriate answers to your business questions. And as an accountant, never assume work with facts. Never assume expense, never assume cash, never just don't ever assume anything or that. So you need to understand your chart of accounts. If you know you found this video useful, please subscribe to my channel to support me and to encourage me, and also like and share to another new early career accountant or a new professional that might find this video useful. Also, one last thing before I forget, In our next video, we're going to be talking about how cash versus profit. That is one of the biggest mistake accountants make, and we're going to clear it up in our next video. So we are sorry that we have not been posting for some time, but we'll try every month to at least drop 2 or 3 videos every month, at least two, but it should not be more than three. So thank you all for following me. Thank you all for subscribing far. Mwah. See you in my next video, guys.